Joining us this morning to talk about that and a lot more, the broader energy sector, is again Capital founding partner John Kilduff. John, great to see you. It's an important day to have you, too, because we got crude pretty much at the highs of the year. Everyone says start looking out for predictions of 90 to 100. Is 83 a pretty good stop?
I think it is. I mean, certainly the move by OPEC Plus there last week to announce a production cut, caught the market a little short. The market was short actually at that time, so they timed it very well. The proof, though, will be in the pudding. I would just point out that historically OPEC does not have a great track record in terms of trying to rescue the price by cutting. And we're already seeing that the Saudis, for example, who led the charge here, are going to maintain their crude oil volumes to Asia, where there's a big battle going on between them and the Russians and some of the other OPEC folks for market share with China. So it's not all bad news. I don't think it's an automatic run to 100. I think we have to have some more problematic issues to hit the tape. So I'm sort of trying to, stay calm about it and carry on, as they say, I guess, in the UK.
Right. It kind of sounds like Granholm this morning, who says we do want to refill the SPR to pre-Ukraine levels if we find prices that are attractive for the taxpayer. Is that, is the timing on that kind of commentary odd, given the move we've had?
I think so. And look, supposedly OPEC members noses were out of joint over the fact that she's been flip-flopping on this whole thing, recently saying that it would take years to refill it. And look, to make a meaningful difference in terms of filling it, in terms of supporting the price, you'd have to go the other way, like we did with releasing it at a clip of about 1 million barrels a day, 500 to 1 million barrels a day to refill it. So, tinkering around the edges isn't going to do anything. Certainly not going to placate the market. We're going to look right through that and not price in anything meaningful from an engagement of filling the SPR. So a lot of moving parts here right now. But look, OPEC Plus clearly worried about the economic outlook and, certainly what the central banks are trying to engineer here in terms of a slowdown. And that's what was factoring into prices. And they did have to do something. I'll just tell you again, though, usually the Saudis at some point here throw a fit. And instead of cutting on their own or leading the charge, they actually flood the market with oil, collapse the price, and try to put, the marginal players, the more expensive players out of business like they did in 2020.
Right. Finally, to Buffett's point about the transition taking longer maybe than we think, we had a fascinating poll out of the AP yesterday saying only 4 out of 10 Americans are even considering buying an EV at the moment. And then you got Conoco today with their 10-year plan, CapEx and free cash flow, but basically output averaging 4 or 5% for the next 10 years.
Yeah, it's not going away anytime soon, absolutely. I will tell you that Occidental, Chevron, and Exxon in particular are all engaging or embarking on trying to get massive carbon capture going. It's a way the oil companies think they can stay relevant and in the game by embarking on an have-it-all sort of policy. Still produce oil, still use transportation fuels to the great extent that we do from petroleum-based crude oil versus, and then in addition to that, pulling the carbon out of the air, sequestering it, and sort of offsetting the damage to the environment to the extent that you believe that carbon does that. So that's their way to keep a seat at the table. And they are spending, as you see with Oxy, quite a bit of money because they want to do it at scale. To make a difference, Darren Woods will always tell you, it's got to be at scale.